Well, this week markets are facing the uncertainty of conflict. So hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday the 17th of June 2025, and before I start, you do need to be aware that whatever I say is general advice only. So the big news for this week is the conflict or the war between Israel and Iran. Neither side will call it a war. War is no longer declared between nations anymore, not since World War II really. The reason for that is if you declare war, there's all sorts of consequences about weapons purchases and sales and using neutral ports and all sorts of treaties and things that might come into play. So there's no reason for countries to declare war. If anything, it's a huge negative. Instead, they just attack each other without declaring war. Now, this conflict has created a lot of uncertainty. It has pushed oil prices higher in the short term, although we do note that longer term oil prices on the futures market actually haven't gone up by that much. And that does suggest that the futures market perhaps thinks this will be more of a short term thing. It'll be contained to, the next couple of weeks. I wouldn't be surprised for that to be the case. I really struggle to see how either side will prosecute this conflict much beyond how they've done already, and that is lobbing missiles and bombs at each other. And as a result, I really don't think it's going to escalate too much further from here. It's probably in the interest of neither side to escalate things much further. I think in many ways, Iran will probably come to the table to try and make a deal. That might include winding down some of the aspects of their nuclear program, but regardless, I do think it'll be resolved fairly soon. As a result, I think we'll see a bit of a rebound in markets. And I have been writing in our market views recently that we're seeing all these short-term issues that the market gets worried about, but then actually they tend to be bullish things in the more medium term because there's a little bit of selling initially, but then when they're resolved, we see a continuation of the upwards movement. We see a rally, we see a buyback when the resolution comes. I suspect that's going to be the case here. The reality is markets shouldn't be falling necessarily because of a short-term conflict between Israel and Iran, even if we do see a short-term spike in oil prices. Markets should be falling because of the longer-term issues that they're facing. Some of these issues have been highlighted in economic data. Some of them haven't been. But in Australia, we've seen Australian economic data come in pretty weak. We've seen the economy head back towards a per capita recession. If we weren't bringing in a large amount of migration each year, we would be in a recession, a pretty bad recession actually. And we're probably going to see similarly bad data on Thursday when we see Australian unemployment released. This is expected to show about 19,000 jobs created. I wouldn't be surprised if it's a little bit less, and that's probably not quite enough to maintain flat unemployment. Unemployment will probably be flat, but if you keep that amount of job creation, we would imagine unemployment will soon start to tick up. It doesn't point to a strong economy, and if that's what the number is, or if the number's worse than that, I think our market will rise. At the moment, the market is pretty pleased by weak economic data. It does increase the chance of an RBA rate cut, and the market is really hoping for a rate cut at the July meeting from the RBA. I think there's a fair chance we get one, although, at the same time, the RBA might decide to pause and just see what the effects of, the spike in oil prices is, the effects of what some of the US tariffs are, and whether or not they trigger a rise in consumer prices. The other economic data events this week are, we've got some US retail sales tonight. Again, it's probably going to be pretty weak. Again, the market probably won't be too concerned by a weak number. What's more important is what the Federal Reserve does in the US. And the Federal Reserve will also meet this week on Wednesday night Australian time, Thursday morning, before our market opens. The Fed is very unlikely to change interest rates at this meeting, but investors will instead look towards their future projections of interest rates. Now, at the last meeting, the Fed still had 2 expected rate cuts in 2025. I suspect that's going to change at this meeting, although it might not. If they keep those 2 expected rate cuts on the dot plot, markets will rally. They will really love that. However, if they drop down to only 1 expected rate cut this year, that's where I think we could see some selling. So yeah, like I said, we've got Australian unemployment on Thursday, Australian time. We've got US retail sales tonight, and then we've got the US Federal Reserve meeting on Wednesday night. So the Fed meeting is probably the most important event this week, and that's regardless of the conflict, probably the most important event this month. As I mentioned, it's very unlikely that we're going to see a rate cut at this meeting. Instead, we'll look towards the dot plot. We will also look towards what Fed Chair Jerome Powell says, and he has been warning about the potential for US stagflation, and that's where inflation remains high, but economic growth starts to trend towards recession. There is a real risk of that happening, and I know many people have assumed that because we didn't see, the US tariff or the Trump tariffs show in the economic data immediately, that's going to be avoided. But these things are slow moving. Keep in mind that if you were to order, goods from China, they're going to take a few months to get here, maybe 3+ months to be made and to be shipped to the US. And keep in mind as well that when the ships leave the port, that's when effectively they've determined to determine the tariff rate is when they leave the port in China. So it's only really the ships that are arriving in the past week or two that are starting to be affected by the higher tariffs. And that's, obviously a lot of the tariffs have been paused as well. So I don't think we've really seen the effects of tariffs in the economic data. Obviously, we've got the tariff pause as well on the reciprocal tariffs. That's going to end in a couple of weeks. And all of this means that I think the Fed will lean towards waiting, and they might also show that in the dot plot and lean towards, pushing some of those expected rate cuts out. And so I do think we'll see movement about this, at this Fed event. And I do think there's a risk that it's to the downside. And if we have a quick look at the charts, this is the US S&P 500. There is a potential for a move back towards the all-time high. That's not a whole lot of movement though. It's about 120 points. It's about a 2% potential upside from here. I really do think that the upside will be fairly limited if we do see a rise in the US. Potential for maybe a 2% rise. However, there is an awful lot of room to the downside if things turn out negative. For me, they would have to break below 59.70 on the S&P 500 to look technically bearish. But if they break that level, I imagine we'll see a move back towards 5,800 and possibly even below. From a longer term perspective, if they don't reach the all-time high this time around before heading lower, that's a really bad bearish signal from a technical perspective. It does suggest a lower peak, and it does potentially suggest overall that we could see an end to the post-2023 uptrend that we've seen in global shares. Long way off calling that. Obviously, we'd need to see a bit of a downtrend start to establish after the break of 59.70, but just something to be keeping in mind if we do see a lower move later this week. If we have a quick look at the Australian share market, and this is the Australian XJO index, the top 200 shares. We did reach the all-time high resistance just above 8,600. We did reach that last week. And then with the Israel-Iran situation, we've actually drifted off a little bit more sideways than anything. We've broken the medium-term uptrend, and overall, we're now just treading water. For us, the key levels to the upside are 86.25 roughly, or 86.20, and to the downside, it's 8,500. Given the uncertainty with Israel and Iran, and the fact that the US market has been a bit volatile, we have been unable to commit to a direction. Instead, we're just deciding to drift sideways at the top of the range here. The Australian market is extremely expensive, but it could get a bit more expensive if we do see weakening data and if we do see an increased expectation of the July RBA rate cut. The biggest risk for our market here is company reporting. If we start to see Australian companies report, they are going to show just how overpriced they are, and that could lead to some downside. Keep in mind, our initial move lower in February occurred before the Trump tariffs, and that was mostly driven by pretty poor bank reporting outside of CBA. So I will wrap it up there for this week, guys. Markets are waiting for the next decision, probably going to come later this week. Maybe they'll receive a little bit of a boost in the next few days if the Israel-Iran situation dies down a bit, and otherwise we're waiting for a directional breakout. Hopefully you guys enjoyed this video. If you did, click like, click subscribe, and we'll see you guys next time.